All right, cool. Daily Cycles, New York, yeah? Now, this has been highly requested. I know I teased the Daily Cycles a bit. It's probably the only thing I don't really go crazy in depth with. And that's pretty much just because a lot of them are sort of my original work. But essentially today, we're going to cover 2 daily cycles that I look at on a daily basis. And they're basically orientated around New York and how I trade New York predominantly. So if you don't know what daily cycles are, essentially all it is it's basically like a framework that I'm expecting New York to unfold in. So pretty much I want to see either New York continue or reverse, right? Those are the sort of 2 main key areas, right? There are in total 7 daily cycles. This is basically talking about 2 of them, yeah? So in terms of New York, these are basically like my go-to ones on how I look for the New York session to expand. A lot of it has to do with relationship between London and obviously what's happened prior. Obviously, you're going to factor in your daily bias, your daily not profiling, sorry, power of 3, all that good stuff. So don't think of this as like a standalone thing, right? I use this in conjunction with everything else, but right, just to show you and signify how important this is to me, this for me is a necessity. This for me is a necessity when I'm actually looking to take a trade. So as you guys know already, we're going to do half on the chart half on the whiteboard and half on the chart, yeah? So yeah, let's get down to this. And I'm seeing a lot of you guys are really appreciating these videos. Yeah, I'll be honest, I like making these. These are cool. These are different. I feel like the whiteboard really gives a little bit of a different perspective, right, on how we're viewing these charts. So I'm going to break this up into reversal, right, and continuation. So New York is always directly related to London, of course, yeah? And the reason why I think New York is favored over London is because if you really think about it, before trading New York, you have 1, Asia's knowledge, so whatever happened in Asia, and then you have London, right, as data that you can go off of. So you actually have 2 sessions that you can use to be able to forecast New York, if that makes sense. Whereas obviously in London, all you have to go off is Asia. So we've got continuation. This is where, right, I'm going to try and get out of the way here. So we have Asia, right, consolidate. We then have London, expand. Okay, so let's see if I'll just box this in. This is London. Then what we want to see in between, so sort of that grey area between London and New York, we want to see a retracement. We then want to see New York open up, right, sweep some sort of liquidity, create a low, and then expand. So this would therefore be what? That NY continuation of London's move, right? Hence the why it's called London continuation, if you didn't already get that. So in this profile, New York is a continuation of London. Typically, right, few key other things. This is a shorter move than the reversal. Okay, New York continuation is typically a move that's going to run till sort of the end of that kill zone. I want to see this low get made at very specific timings around sort of CME timings. And essentially, you want to see almost like a power of 3 inside this session. I don't really look at it like that, but a lot of the time that's basically what ends up playing out. So you can use power of 3 inside of this concept. So for example, let's say this was 12 o'clock, this was 1 o'clock, and let's say 1 o'clock finished here after sweeping I'll draw it like this. So let's say this was a higher time frame level, this was the bearish candle, and then let's say we had a large wick there, and this 1 o'clock candle finished like this, right? So we could say with a strong degree of confidence that London has expanded prior. We've gone ahead, tapped into a higher time frame or some sort of key level here. We then are confident in the next hour, that last and final hour of New York, to go ahead, come lower, and then expand to the upside. Okay? So, yeah, that's basically, in a nutshell, NY continuation. Now, NY reversal is a bit more aggressive. So we have Asia. Okay, now Asia and London, it doesn't really matter what's going on too much. I'll show you an example where London does expand, but to be honest, if they both consolidate, it's completely fine. So we have Asia, we have London, let's say London expands, Now, what New York's going to end up doing is going to slow down, consolidate at this level. Normally, you're going to have some sort of key level here. New York is then going to go and reach up, right, inside of key timing, inside of that kill zone, and then give us a nice run expansion lower, likely to go and reach for, let's say, equal lows were built during Asia/London, yeah? And so this session here, I probably should use different colors for this, is going to be New York, okay? With this move, right, this move normally runs a lot longer than this one. This normally runs till the end of London close. This is normally a very, very aggressive move and a very large move in the markets, okay? The distance from here to here is typically, look, it's going to end up engulfing the entirety of the previous or the London and Asia sessions ranges, okay? So with the reversal, like I said, you want to sort of do this all around key levels as well, right? This is another key thing. I'm not really going into the day, and don't get me wrong, I used to do this, but I'm not really going into the day sort of anticipating, maybe we'll have NY continuation, maybe we'll have NY reversal. The key thing you need to understand is you want to have your daily bias already figured out. So for example, in this specific day, I would be having a bullish daily bias, and I'd be going into this session already fixed, knowing that I'm bullish, and that we're looking for the cycle to sort of complement it, if that makes sense. So we're bullish, we see London expand higher, we have like an hourly FVG right here. Again, if I had a different color, I'd be using this right now. We have an hourly FVG here, New York comes in, sweeps key time, etc., right? Same with this one. We need to have a bearish bias intact first. You do not, I mean, look, I have done it before, but you don't really want to go in and trying to really forecast like what the daily cycle is telling you. You're going to get a lot more success and a lot better and higher win rate actually having your daily bias set and then just molding the cycle around. So for example, let's say you had a bearish bias here. We have Asia play out, and then let's say London consolidates or London runs against you. When that happens, you know, okay, cool, you know what, New York is gearing up for a big move. And then you're going to wait for New York to play out, see if the relevant timings come into play, and then watch NY expand to the downside. Okay, cool, let's go over to the charts now. I'm going to show you a move that I called out prior to my group. I'm going to show you exactly what I was thinking, how I got to that conclusion, and then which cycle it ends up playing out as. All right, cool, welcome back to the charts. Now, I'm actually going to cover a trade that I called out inside of Discord on the 4th of September. So this was last week. I've actually called a really nice trade that actually played out today. So I'm going to try and get a video talking about that out soon, just to sort of keep this about more relevant data. But just to show you, right, I'm showing you DXY here first, and then we're actually going to go ahead and cover EU. I did actually make a reel about this, but I covered DXY specifically. I'm going to go ahead and show you on EURUSD exactly what we was looking at. So you can see here, this is the premium outlook. On DXY, I mentioned that we were holding the daily SIBI very nicely. We'd swept liquidity, want to see the low get ran out. I'll show you what that means in a second. And ideally, we want to push to that H4 BISI, waiting for an impulse during London, and then we'll look to play MY. So we were looking like this. Also here, you can see I've marked on the weekly FEG2. We have a CSD, right? But I've put CSD question mark because that top of the move is typically the hardest point to gauge. And we have this low. So basically what I said in that block of writing is that I wanted to see price come and expand down to this FEG here beneath this low, pretty much, right? And that I wanted to see, and this was at 852. So basically I wanted to let London play out, and I'll basically ruin it for you. This is a NY reversal cycle. So at this point in time, I'm still speculating London to give us a like a push lower, and then NY to continue. But what ends up happening, or what I basically explain, is that these are my conditions to take the trade, and then I do a little screenshot on my phone, and I say London didn't impulse. This was actually supposed to be like a written message under there, and then during New York, we get the push higher into this gap. We go ahead, we rinse both Asia and London's high during that key time. And don't worry, I'm going to go on the chart and show you this. I just want to show you me sort of doing this live. You can see, look, the timestamps are there, 2:07, 2:07. This is, again, UK time. So we'd gone ahead, swept that 15-minute CSD, and I wrote we should go ahead and run for these equal lows now. And yeah, we basically ran bearish ahead of the news very, very nicely. And the news, in fact, ended up taking us straight to this level. Okay, so let's just do a bit of an analysis on DXY just to reiterate what's going on, and then I'm going to cover it on EURUSD as well, as that's sort of the bit that no one has seen yet. So we're inside of this weekly level. We're in a sell program. In terms of proximity, we have this monthly low that hasn't been tagged yet. So that's basically the drawn liquidity based on the idea of proximity. We started off the month by actually going higher and then expanding lower. So it's beautiful in terms of a power of 3 expectation, yeah? Now, I don't actually think... Oh, yeah, this is the start of the month. Ignore what I'm saying. So this trade basically, right, is the idea that we started accumulating inside of this weekly SIBI. We manipulated. This was Monday. This was Tuesday. So we're already forming the idea of a classic sell week also. And now we kick in on Wednesday. And essentially, what I was thinking at this point was we've taken liquidity to the upside. So we know there's willing buyers, okay, being trapped above that high. All right, notice how we didn't go and tap that high. That's basically the reason. And we'd actually gone ahead and pulled all this liquidity to the downside. So I'm basically fairly confident in the idea that we're going to expand lower. Now I just needed some sort of power free to get behind that move. Okay. On the daily, we'd closed fairly bullish, so I wouldn't have used the daily power free in this setting. So based on the 4 hour on the 1 hour, all right, and I'll show you the 4 hour on EU, it'll make sense. That's why I wanted to look for a short. So the hourly looks good here. We've went ahead, raided out liquidity, and I'll show you this at key time of day in a second. So I was anticipating the next 1 hour candle, sorry, to expand to the downside. Very, very clean. If we go to the sessions, again, you can see Asia, London. Once we got this CSD, it was pretty much, or clear to me at least, that we were going to go and run out these lows, okay, and at least get to that 4 hour level. So let me actually just cover this on EURUSD, as I know I have already covered that on a reel, and I'll link that in the description. So on EURUSD, right, what did this look like? Well, let's just go ahead and let's just, again, go and analyze everything. So based on the monthly, we just opened up. We're more likely to trade to previous month's high, so I'm keeping that in mind. On the weekly, we have this weekly FEG down here. Now, on DXY, we'd already gone ahead and tapped that FEG, if you remember. Okay, so what does that mean? That's basically SMT right there. So we had SMT. I'm like, cool, you know what? This could just leave this level, and this could act as a breakaway gap, and potentially we could go ahead and start running to the upside, right? So that's, again, one of the ideas in my head. We then had this daily FEG. Now, I know there's 1, 2, 3 daily FEGs. So in a way, this looks cherry-picked, but you got to remember I'm using this as in confluence with DXY, which has already gone ahead and tapped a weekly FEG, okay? So you need to like factor in all those factors essentially. So we'd filled this FEG, again, very significant, and this was the candle that you'd end up taking the trade inside of. So forget that, you can actually see this. So based on a daily candle, I wouldn't be able to use a daily power of 3, because why would I have any expectation in this essentially going higher? And the answer is I wouldn't. Now, key thing to note, this is the target we end up reaching for. Just keep that in the back of your mind. So on the 4 hour now, it actually looks like I've been really aggressive and bought from the bottom. But you'll see why I haven't here. So buying from the bottom would basically indicate I was trying to catch this low here. Now, the key thing that sort of helped me to understand what was going on here was that we'd swept liquidity, we went lower, we pushed higher, and it was this 4 hour FEG that got filled that made me understand that the next 4 hour candle is very likely to expand to the upside, right? So when I take a trade, right, I have a sort of a set flow chart that I need to tick off, right? First one is is, and I'll make a separate video about this, has liquidity been taken? Yes. Okay. Can I gauge a power of 3 on an hourly, 4-hour candle, an 1-hour candle, 4-hour candle, or a daily candle? Okay. In this event, we've just filled an FEG, we've swept liquidity, we've pushed higher, we've shown that we're in a daily BISI. So yes, I'm confident to say that we can go ahead and expect the next 4-hour candle to push higher. Now, where is that to? Well, we do have fair value all the way up here, and all of this is low resistance liquidity. Now, I'm not expecting I wasn't expecting at least the next 4-hour candle to get all the way up here, but at least to reach for this high where I'd go break even / negotiate some sort of partial take-in. Okay, and then obviously as the targets go, I basically TP based on time predominantly. So basically I have within the daily cycles, like I've told you before in the whiteboard section of the video, normally NY reversals run till the end of London close. So I'll use that time period to take profit. Okay. So we filled this FEG. Yeah. So sorry, I was going through my flowchart. So we had the we had the power of 3, right? Checked off. The next stage or the next part is, are one of the daily cycles in play? Okay, so now you can see on here we have Asia, London, and New York. So pretty much here, Asia did a consolidation, London didn't really do anything, and then New York has gone ahead, wicked lower, expanded higher, again 15-minute CSD, very, very, very nice. And then at this point in time, you can go ahead and get on side with the trade pretty much, right? After, I haven't really spoken about entries, but 15-minute CSD is very, very secure. Like if you wanted to pick one and stick with one, 15-minute CSD is great. So again, the cycle's in place, so that's checked off. And then the last bit is an entry model. And like I said, 15-minute CSD in this case would be great. So I wanted to see the next 4-hour candle push higher. And just to, I guess, go in a bit more detail, see how I've come to this conclusion using like a market maker ideology. The fact that we've swept liquidity on one side. So what does that actually mean? Trap traders. We've filled fair value to the downside. We have low resistance liquidity above us. We filled a daily BISI, right? So understanding it from an algorithmic perspective will give you a really good read and sort of understanding of narrative and bias in price. So like, for example, the fact that we filled this FEG and closed so bullish, to me is like, cool. At this point in time, we should push higher, right? And my invalidation point, of course, is going to be somewhere around here. Probably would even be the fill of the FEG, just because once we filled the FEG and we're looking to reprice higher, we shouldn't really get there anymore, or we shouldn't come back to that region. So yeah, as you can see, very, very nice, very, very clean. This low, I would document, right? Go ahead and document the low of New York session in these New York reversal cycles, and you'll find something very, very, very powerful. So again, CSD, when I say CSD, right, I'm not saying like wait for it to tap the CSD. I'm literally saying once you get the CSD, just enter. Like you don't need to wait for FEG form, blah, blah, blah. Like if you're using all of the things that I've mentioned, a lot of the time you're not going to really get an FEG fill here. Okay, so let's go back to the hourly and let's have a look at this expansion. Right, there you go. Right, so we go ahead and we run really aggressively. Okay, we run out a ton of liquidity, and like I said at the start of this analysis, pay attention to what? This daily level here. Yeah, so that's actually what we go ahead and reprice to, and that's why it's really important to overlay higher time frame levels onto these sort of lower time frame or when you're reading intraday price, essentially. Okay, so anyways, hope you guys enjoyed that. If you have any questions, feel free to message me. As always, hope you guys got a lot of value out of that, and I'll see you guys in the next one.